everyone. I am Donna Nevolo. I'm a partner at Witham, and I am the leader of Witham's Employee Benefit Plan Practice Services Group. I'm joined today by Izzy Tannenbaum. Izzy is a partner with Witham as well, and he is in charge of our 5500 filing practice. Today we're going to go over a couple of things regarding 2022's updates on employee benefit plan audits and 5500 filings. So today we have a question. The initial question that I wanted to ask Izzy is about the 5500 filing deadline is quickly approaching October 15th of this year, and many times our clients or plan sponsors call us and have concerns about not having a complete 5500 ready for filing by October 15th, and they ask for advice as to what they should do. So Izzy, what do people do when their 5500 may not be complete by October 15th, either because the audit is not finished or a Schedule SB from the actuary is not available? What should they do?
Yeah, that's a great question, Donna. It's something that I think is coming up a lot more ever since, COVID and all these other challenges we've been having, whether it's, to your point, a delay in the audit, whether there's delay in the actuarial work. There are often times, and probably more so in the last couple of years, where people are finding themselves in these situations. And what we recommend typically is really to file timely with as much detail as you can provide, and then ultimately go back and amend your return when you do get the rest of that information. So if you're in the middle of the audit process, it's not complete, still file your 5500 and include whatever you can. And then ultimately, once you do complete that, go back in and file it correctly. This is really the best strategy because it does stop the clock on any penalties accruing. And typically what happens is you may receive a letter back from the Department of Labor asking for the additional information and stating that your audited financial statement, for example, is required to be provided. And in addition, I would add that the DOL has been known to be relatively reasonable when it comes to this. So if you do get that letter, you can respond to them. If you do need more time than they initially may allot you, they're, typically very willing to work with you and understand that there are a lot of challenges, like I said, especially in these past couple years. So again, I think the best thing to do is to file with as much information as possible and as full and complete a return as you can put together by the filing date, but then make sure to go back and amend that return and get all the proper information in there.
Great, good suggestion. Thank you, Izzy. Now, sometimes we have plan sponsors that have a 401k plan or some kind of retirement plan, and they've either never filed a 5500 or they have not filed in several years, and they start a 2021 audit and realize they should have had an audit in 2020. So what do companies do when they determine that they have some 5500s that they haven't filed and they need to file to get caught up?
Yeah, that's another great question as well. And unfortunately, something we see pop up often, whether it's because many times people didn't realize they had more than one plan, whether it's because they didn't realize that no one was filing or that the administrator wasn't filing. So a lot of different reasons we see out there why this happens, but it does happen. And so when an organization realizes that they're delinquent in terms of their 5500 filing, there is a great program that was set up by the Department of Labor called the Delinquent Filer Voluntary Compliance, or DFVC program. And what this does is it provides plan administrators with the opportunity to pay reduced penalties for voluntarily complying with these annual reporting requirements. So essentially going back and getting current and filing those missing 5500s, and then for doing that, you ultimately will get a reduced penalty. Now, it's important to note that to be eligible for the DFVC, you have to have a plan that is Title I under ERISA, that is governed by Title I under ERISA, and also you cannot have yet been notified in writing by the Department of Labor for failure to file a Form 5500. So as long as you are proactively doing this, voluntarily as they term it, the Department of Labor is quite generous in that essentially the fees for the DFEC for filing those delinquent and late Forms 5500 are capped. The actual fee is $10 a day up to a per filing cap of $2,000 for plans with at least 100 participants and $750 for small plans that have less than 100 participants. Now, note that there is a per plan cap of $4,000 for larger plans or $1,500 for small plans. So, for example, if you sponsor 3 large plans and each failed to file a Form 5500 in 4 separate years, that would essentially amount to $4,000, the large plan cap, times 3 for each plan. What's nice about this is that there can definitely be much more significant penalties for delinquent Forms 5500. So the DOL is really offering you a great opportunity here to become compliant and again, really pay these reduced and capped penalties. Now, I would just note that the DFEC doesn't really relieve filing penalties that can separately be assessed by the Internal Revenue Service. However, the IRS generally will waive late filing penalties for Form 5500 filers who satisfy the DFEC requirements. So really a great program and a great way to become compliant with minimal expenditure in terms of penalties. So I definitely, if an organization realizes they haven't filed for a plan for 1 or for a couple years, great opportunity for them to become current, again, being capped for each plan at a specific amount rather than the IRS and the DOL assessing these penalties separately.
Yeah, that's great information, Izzy. And I know, I mean, it really does save a lot of money in penalties for clients. And I know that that is a service that you provide for some of our clients when we do have them, and when they do find themselves in those situations, you help them through that delinquent filer program, which is very helpful. So that's great information. Thank you. So the next thing we wanted to talk about is the new SAS 136, which is the new audit requirement for employee benefit plan audits that was effective January 1 of this year for audits that happened for the 2021 plan years. And as part of that update, the audit opinion is actually changed from prior years. We used to issue what was called a limited scope audit opinion. And well, we had the ability to do that, and now that type of opinion is actually considered an ERISA 103A3C audit opinion, and it's a two-pronged opinion. Where it used to be a disclaimer of an opinion, now we're actually opining on the audit areas that the areas of the financial statement that we have audited, and we are stating that the information that we're not auditing was reconciled to the trust reports and without issue. So it's a two-pronged audit opinion. So that actually is changing a section of the 5500 filing on Schedule H where it's the auditor's opinion section. So can you tell us now how we're supposed to be filling out the 5500 auditor's opinion section, the accountant's opinion section?
Absolutely, Donna. So as you mentioned, SAS 136 has now been, at this point, adopted by everyone, and the Form 5500 was changed to reflect this. And so on Schedule H in the accountant's opinion, specifically, lines 3A will now continue to have the 4 different types, but line 3B was changed in order to now have a yes or no question with checkboxes to indicate whether you did an ERISA Section 130A3C audit pursuant to 29 CFR 2520.1038 or pursuant to 29 CFR 2520.10312 or pursuant to both. And essentially, I would add the instructions have been revised about this as well. But essentially, to Donna's point, I think that it really is the main change where now you're going to be filling this out as an unmodified opinion in this section. So line 1 or 381, where previously you would have been putting disclaimer, essentially this is going to be an unmodified opinion going forward, which is a big change. And so ultimately, the Schedule H has been updated to reflect these changes and these new reporting standards.
Excellent. Thank you. Yeah, there's a lot of confusion about that this year. So, so thanks for that. And now I know that there were some changes in the regulations as far as penalties for on 5500s. So can you, and you talked a little before about the delinquent filer program to avoid the penalties. The dollar value of the daily penalties has increased, right, in 2021, and then also 2022, they've been increased again. Can you tell us a little bit about those?
Yeah, absolutely. And you're right. I did allude to this before. The penalties for not filing these informational returns, as the IRS tends to do with informational returns, um, are fairly significant. And now, while they hadn't previously been as bad, they in 2021 were drastically increased. And again, I think this is generally the way IRS does things when it comes to non-tax paying returns, in that there's no actual tax. These are informational returns. But it is critical that this information get filed, so the IRS does put some pretty significant penalties around this, the DOL as well. And so for late filed returns, as I pointed out before, subject to both penalties from the IRS and DOL. The DOL penalty being $2,259 per day with no maximum, and the IRS penalty, which was updated based on the Secure Act, is $250 per day up to a maximum penalty of $150,000 per year. And note that that was updated and increased from $25 per day, not to exceed $15,000 per year. So really, really significant increases in these penalties, which in addition speaks back to why the DFVC is so important if you do discover that you have delinquent filings, because that cap on the penalties can really save organizations a significant amount of money versus what the IRS and DOL can separately assess. And I would just also note that for the 8955 SSA, the IRS can assess a separate penalty as well of $10 per day per late filed participant.
Wow, that's amazing. That is very steep. That's why the
It adds
DFVC is
up.
very appealing. Yeah. Okay, so thanks for that. The other question I had is in regards to the contribution limits. I know those were increased. They increased in 2021 and then 2022. Can you tell us what those are?
Yeah, absolutely. So as it does annually, the updated contribution limits for benefit plans have been released. For 2022, the contribution limit for employees who participate in a 401k or 403b and most 457 plans as well was increased up to 20,500. And additionally, employees age 50 or older can actually contribute an additional 6,500 as a catch-up contribution for a total of 27,000. The limits, however, on contributions to IRAs, both traditional and Roth, remain unchanged for the year at $6,000. Now, the total annual contribution limit for defined contribution plans was increased from $58,000 to $61,000, and the actual annual compensation limit for calculating these contributions was increased from a cap of $285,000 to $305,000. I would also note that for defined benefit plans, the annual benefit and accrual limit increased from $230,000 to $245,000. So those are most of the main contribution limits that would be updated annually and will be relevant for most of the benefit plans out there.
Interesting. I mean, the limits keep going up to encourage more and more savings, right, for retirement. So that's great. Okay, so now I know that there was a Rev Proc that came out 2021-30, and there were several updates in there that are important and really relevant for plan sponsors to know. Can you tell us a little bit about those?
Yeah, absolutely. There was a lot of great updates within that Rev Proc that really had a lot of beneficial changes for plan sponsors to make their lives a little bit easier. The main one being the extension of the self-correction program. The actual correction period you could use this self-correction for significant failures was changed from the last day of the second plan year until the last day of the third plan year, following the plan year in which the failure occurred. Now, I can tell you that although it is only an addition of a year, for every single person, and I've dealt with many many benefit plans where this has happened who are discovering this in that third year, this is going to be a very welcome change to be able to still self-correct it. So really, probably what I would say is the biggest and most beneficial change of the RevProc is giving that extra year to be able to use self-correction, which is a lot easier than having to go through the other types of process under the EPCRS. In addition, 2021-30 also had an expansion of corrections by plan amendment for operational failures under self-correction. So essentially increased the types of failures that self-correction could be used for. And again, a lot less of a cumbersome process than having to go through the full EPCRS. So definitely a welcome change. And finally, there was an expansion of flexibility in terms of how the benefit plans have to recoup overpayments. And these new principles really reduce the need for the benefit plans to seek repayments from participants or beneficiaries who may have, in some cases, received overpayments that they should not have. And in many instances, these updates don't require the plan sponsor to either reimburse the plans or look to get these repayments whatsoever. So definitely making life a little bit easier on plan sponsors, as well as it reduced the de minimis amount under which a plan sponsor is actually required to correct these overpayments. So it used to be $100, any amount over $100, and now it's any amount over $250. So I think overall 2021-30 was a very welcome change and provided a lot of ways in which it will make life easier for administrators of benefit plans.
Sure, they're really encouraging that self-correction, right? Sometimes issues happen in plan operations all the time, and you know, the DOL and the IRS would prefer plan sponsors to try and self-correct and fix it and deal with the issue as soon as possible and then move on. So they've expanded the opportunities for plan sponsors to do that, which is terrific. So thanks for that, Izzy. Our final area, there's a lot of news in the employee benefit plan world about crypto being offered in retirement plans, and it never was offered before, and it's something that is new. And I just wanted to see what your thoughts were on that and what you're seeing in practice.
Yeah, that's a great question and a really hot topic. As we know, Fidelity Investments unveiled its first program over the last year to offer cryptocurrency and 401ks. Subsequent to that, the DOL came out with a statement and essentially cautioned plan fiduciaries to exercise extreme care before adding cryptocurrency option to a 401k investment options. With the way this market works and with its volatility, I think we can certainly understand why they are cautioning plan fiduciaries who have a responsibility to invest prudently and have that fiduciary responsibility to the plan's investments. How this develops, I think is going to be interesting to see over time. But at this point, you can look at the market every day when it comes to cryptocurrency, and I don't think most plan participants would necessarily want that level of volatility when it comes to their retirement savings. So it's definitely going to be interesting to see how this develops over time.
Yeah, absolutely. There's so much interest about it, and so we'll kind of wait and see how that all plays out, who's providing it, and what that involves. So it'll be interesting to see. So thank you for that. So that closes our update for today. If you have any questions, please feel free to reach out to Izzy or myself. And you can also visit our website at www.witham.com for more information on employee benefit plans and any updates that are available. We're always adding more content to our website with regards to updates in this practice area. So thank you for joining today.